Coming up on Business Incorporated today, Tanzania's president appeals for continued cooperation with the International Monetary Fund on revival of productive sector. South Africa allocates additional 4 billion rand to purchase COVID-19 vaccines. Tax collections in Kenya rises by 22.63% in April. Hello and welcome to the program. I'm Imi John McCall. We start off with the market numbers now. Major markets we track here in Africa were mostly positive. The Jersey gained the most by 0.47%, while Nigeria's main index was marginally higher by 0.03%. Only the EJX 30 in Egypt declined at intraday by 0.24%. Kenya ended Monday's session positive. Well, the picture was different in the Middle East, where major markets we track were mostly in the red at intraday. Only the market in Abu Dhabi gained 0.37%. Dubai's index declined 0.38%. Elsewhere in the region, Saudi Arabia's index lost the most by 0.48%, while the Qatari index fell 0.37%. And in Europe, stocks were mixed this morning as investors monitor global recovery prospects and a fresh round of corporate earnings. Chelsea has more for us from the European scene. Hello, Chelsea. Good afternoon. Welcome to the show today. Well, shares of German coronavirus vaccine maker BioNTech have soared this week and are set for a new record again on Tuesday. What's driving this rally?
Well, BioNTech has really gone from being a basically unknown company in the biotech space to being really one of the companies at the forefront of coronavirus vaccine development. They're one of the company that's partnered with Pfizer on their coronavirus vaccine, and this has really just transformed the face of BioNTech. In this last quarter, they went from earning 20 million euros in revenue a quarter to earning 10 times that amount. So they are making a lot of money now from the Pfizer vaccine. This has really boosted their fortunes in an extreme way. So what we've seen over the past couple of weeks is just an incredible amount of demand for the Pfizer-BioNTech vaccine. They've been striking new deals with the EU, with other countries to continue producing these vaccines. And this is something that is not only driving their shares and their results in the short term, but this could be years of contracts and years of revenues. So we saw yesterday their share price rise about 10%. In the past year, though, this stock has risen by more than 300%, and that's driven mostly because of its place in the race for a coronavirus vaccine.
Many countries are making plans to lift coronavirus measures as vaccine efforts accelerate. Germany could lift some restrictions as soon as this week. Tell us more about that.
So Germany actually today, the federal cabinet, which is a cabinet of political leaders in Germany, they approved a bill that would basically lift a lot of restrictions for people who have been vaccinated against the coronavirus. So these people who have received their vaccinations would be able to, for example, avoid things like contact restrictions, nightly curfews. They also would be exempt from some of the testing requirements that are currently in place to, for example, go into a shopping mall, into a store, into a hair salon. So that could be a boost for some of those businesses who still see consumers quite wary to go into retail establishments. But Germany hasn't yet laid out a full reopening plan. We've seen this from other countries like Italy, like France, where they've sort of set out their plans and their proposals for reopening businesses like restaurants and retail stores. Germany hasn't yet done that, but as we start to get further along in the vaccination campaign, right now about nearly a third of Germans have received a first vaccine. There is more and more pressure growing on politicians, particularly from businesses that have been under lockdown measures for almost 6 months now, to set forward a full reopening plan for the economy.
But in spite of the number of people who have received the vaccine, October 1st is going to be cancelled again for the second year in a row due to, of course, the pandemic. And Oktoberfest is a huge money maker for the economy. What is this doing to the economy?
Well, yes, I think that the cancellation of Oktoberfest just shows that we will still see restrictions in place for the foreseeable future, even as countries go forward with reopening plans. Oktoberfest is really significant here in Germany, not just culturally, it's been around for more than 200 years, but also economically. It brings in more than €1 billion every year, and this is really a crucial lifeline for a lot of businesses, not just breweries, shops and stalls that set up at the Oktoberfest fairgrounds every year, but also a whole range of industries like, for example, hotels, taxi drivers, restaurants in the area that benefit from the 6 million tourists who come to visit Oktoberfest every year. So this will be a major blow for many of them, but politicians say it's just impossible to ensure that that would be a safe environment because Oktoberfest is generally very crowded. There's not a lot of space, and there's really not a lot of space for social distancing at an event like this. But it's not going to be a total wash for these businesses. Last week we saw reports that actually Dubai is planning to recreate Oktoberfest this year. They're planning beer stalls, sort of the entire Oktoberfest experience in Dubai later in the fall. So many German businesses could potentially set up there instead this year. So there is a little bit of hope on the horizon for these Oktoberfest businesses.
Well, Chelsea, talking about adopting to the new normal. Well, thank you so much for giving us updates this afternoon, Chelsea. Enjoy the rest of your day. Well, we now head over to London, where Juliana is standing by to bring us up to speed with latest data in the UK. Well, Juliana, I know you discussed data with Chimi in the morning, but it seems today is a data. There were 82,700 mortgage approvals for house purchase in March. Consumer credit fell by around £500 million in March. What other data do you have for us, and how are investors reacting to these numbers?
Good afternoon, Innie. Well, yes, it's a shorter trading week this week, so a lot seems to be crammed in on the first day back. The FTSE, some really positive territory. And as you said, I spoke to Chimazé this morning about the PMI manufacturing figure, really positive data coming in at 60.9. This is up from 58.9 in March, above what some economists had thought it would be. They thought it would be at the flash estimate of 60.7. This is a 27-year high for that sector. There's been exceptional growth. Of course, lots of this has got to do with the easing of restrictions and the fact that there are still some bottlenecks. So a lot of manufacturers in the UK are working extremely hard under lots of pressure. This is the 11th successive month of growth, so that's big. Also, separately from that is the housing market. We know that the housing sector in the UK has been booming. A lot of this is down to a lot of the government support schemes. We've just had started the 5% mortgage scheme, which is going to take hundreds of thousands of generation rent into generation buy. And before that, we had the stamp duty being frozen, and that's going to be frozen until the end of July, which is why we've seen lots of people rushing to get mortgages. So the approval came in at 82,700, not as high as that 100,000 peak we saw in November 2020, but still way above the pre-pandemic levels that were witnessed in February. A lot of economists expect the amount of level of borrowing and the approvals to continue as the government are going to back that 5% scheme. So let's have a look at the numbers at intraday. The FTSE All-Share is up 0.52%. The FTSE 100 is up by 0.65%, and the FTSE 250, the domestic market, is up by 0.04%. In the currencies market, the British pound is down against the US dollar by 0.18%, up against the euro by 0.29%, and also up against the Japanese yen at intraday by 0.18%.
Well, more jobs are set to be available in the UK as Infosys says it is hiring 1,000 staff to meet a digital growth surge. What kind of jobs would these be, and who are the likely candidates?
Well, yeah, this is a great story for the UK digital tech sector, which, especially under Boris Johnson's government, they're really trying to put themselves front and centre in digital innovation. It's great for the labour market. Infosys, like lots of other, excellent digital tech companies, have been thriving during the pandemic. They've already got a very large footprint across the world. I believe they're in about 40 countries. They already have a significant presence here in the UK, but they have announced that they are going to be employing 1,000 graduates, either from university or college, to help them with their digital software across all areas within that sector. And they're going to get lots of mentoring. This is this is really part of a much wider story. I spoke about that on this Business Morning this morning, about Britain and India signing this £1 billion or £1 billion trade deal. Currently, bilateral trade between the countries is worth about £23 billion as Britain is charting this post-Brexit course, trying to forge new bilateral trade relationships with individual countries across the world. They're hoping with the new deal that was signed today that by 2030 this £23 billion trade agreement will double. So this is a great story. So as soon as this the trade deal was signed this morning virtually, because Boris Johnson was supposed to be in India, he had to cancel that trip because, of course, the catastrophic surge in COVID cases there. But they did have a virtual meeting, himself and his Indian counterpart Narendra Modi, and this Infosys deal was confirmed just an hour after that. I will very quickly read a statement that I've got here. Salil Parekh, he's the Chief Executive Officer, has said, "Our commitment to the UK is to support both recovery and growth through digital acceleration, hiring new talent, and supporting the development and reskilling of existing talent to meet evolving economic demands." Prime Minister Boris Johnson has also welcomed this.
All right, so the factories are not having it so good. They're facing disruption, lack of raw materials, lack of parts. What's driving this at this time? And is there any discussion to provide succor for the factories?
Well, yeah, this is a major discussion. This is not a UK isolated talking point. I believe global disruption chains have been going on since the pandemic. In Britain, of course, Brexit hasn't helped it. There's lots of bureaucracy at the borders. So many different industries and sectors have been sent back because they don't have the amount of paperwork. And then, of course, the massive story from last month, which was the Suez Canal blocking of the Evergreen ship. There's still lots of implication and fallout from that. This is why the PMI manufacturing figures, not just in Britain, but I believe France has come in particularly high today. It's because of that, because manufacturers are getting so many orders. I think the worrying cost of the bottleneck is what is going to happen with consumers. The rising costs are going to trickle down. This is what's, causing a little bit of anxiety amongst investors about inflation. And then, of course, it will be the consumer that has to pay for it. But yes, this isn't a UK isolated story. Lots of countries, particularly in the US, are talking about these bottlenecks and how they have to be eased out in the coming months.
Wow, I wonder how that will be solved. Well, we'll look at how it is being dealt with in the coming months. Well, thank you so much, Juliana, and try and enjoy the rest of your day. I know you still have the global business coming up. Okay, so we move over now to Asia, where stocks in Asia Pacific were mixed today, with major markets in Japan and China still closed for holidays. Hong Kong's Hang Seng Index rose 0.65% as its final hour of trading. Over in South Korea, the Kospi closed 0.64% higher at 3,147.37. While in Australia, the S&P AX 200 edged 0.56% higher to finish its trading day at 7,067.90. Investors also continue to monitor the COVID situation in India as it shows little signs of slowing down. MCX Broadex Index of Asia Pacific shares outside Japan rose 0.21%. Markets in China, Japan, and Thailand are closed today for holidays. We'll take a break now. When we come back, more stories for you on Business Incorporated. Welcome back to Business Incorporated. We now go to the commodities market update, and today we discuss cucumbers. Now, cucumbers are those green fruits that contain about 95% water and come highly recommended as natural diuretics, and they are helpful for bodybuilding. Little wonder then that especially at Ramadan season such as this, demand increases. This is in the face of the galloping inflation in the country. Cucumbers are our focus on commodity segment today with Juliet Adenuga. She's the head of Treasury Financial Derivatives Company. Hello, Juliet. Good afternoon, and thank you so much for joining us.
Good afternoon, Chimeze. Thank you for having me.
Yes, actually, Ini, not Chimeze. Okay, so
Okay,
in
Ini,
Nigeria, the price of a bag of cucumber has increased by 100% from 4,000 to 8,500. How long do you think this price increase will be, and what impact do you think it will have on the demand and prices of substitutes to cucumber?
The price of cucumber has increased by 100%, as you stated. But in terms of sustainability of the price increase, I don't think it's going to be that long, because first and foremost is that the market of cucumber is not perfectly elastic. It is a market that is very, very competitive. Many people come in and go. There are many sellers, and so they can influence the supply of cucumber. Now, the production lifestyle of cucumber is just 12 weeks. It's just for farmers to get rid of the fact that the price in cucumber has increased, and then just adjust their supply or production towards cucumber. If they do that, it can flood the market. That is one reason I think it's not sustainable. Secondly, is that cucumber is not a necessity, really. It has substitutes like celery. There are other substitutes like zucchini and jicama. Those Mexican and American vegetables give the same crunchy effect that people desire in cucumber in their salads and sandwiches. So with substitutes on the ground, it's not sustainable that the price is not sure that the price can be sustained, because people can shift their demand to substitutes. And that can also have an effect on the substitutes by increasing the price. If you listen clearly, you understand that the substitutes I was mentioning are not common in Nigeria. So instead of having that same normal economic effect it should have on substitutes, people might end up not going for cucumber if it is not within their budgets or their pockets presently.
So you don't expect that the increase in price will affect the demand?
It is supposed to affect demand. Demand has already dropped because people cannot afford it as before.
All right, so in the last 2 years, the output of cucumber has dwindled in Nigeria. It's now speculated to be approximately 1 million tons. What are the factors responsible for the continuous fall in production of cucumber, and what effects will it have on farmers' income and generally on the country's GDP?
There are so many factors that affected this drop in the production, but I'll just mention two. One is the impacts of the COVID. The pandemic period was very bad for farmers. One is that the lockdown, stopped movements within the states, both intra and interstate movements. So cucumbers that have short, production lifespan of maybe 12 weeks from planting to being ready for consumption, most of the cucumbers produced then perished. So that was a very key challenge they had. It perished, and that affected the income of farmers. A lot of farmers went into losses. In short, some of them had to go out of production entirely because they couldn't just manage the losses. That affected their income and also had a negative impact on GDP, because the agricultural sector contributes 24% of GDP, of which crop production is 21.8%. Cucumber is part of crop production. In short, apart from cucumber, any crop that impacts negatively on GDP would have been affected by one thing or the other. And the pandemic affected cucumber, and so affected the GDP of the Nigerian economy negatively too.
All right, thank you so much, Juliet Adenuga, for sharing your thoughts with us this afternoon. Juliet Adenuga is the head of Treasury at Financial Derivatives Company. Thank you so much for joining us.
Thank you.
So we move over now to Tanzania, where the President Samia Suluhu Hassan has appealed for continued cooperation with the International Monetary Fund in supporting productive sectors that were affected by COVID-19. According to the President, the COVID-19 pandemic has slowed down the country's economic growth from 6.9% to 4.7%. She's also asking the IMF to keep on supporting Tanzania on the implementation of flagship projects including the ongoing construction of a standard gauge railway and Julius Nyerere hydroelectricity power project, expected to produce 2,115 megawatts of electricity upon completion. On her part, the IMF Director General Kristalina Georgieva has assured that the fund is ready to provide quick support in order to revive sectors such as tourism and health that were highly affected by COVID-19, as well as production and provision of social services. In South Africa, the government has allocated an extra 4 billion rand to buy COVID-19 vaccines and extend a special distress grant to thousands of people hit by the pandemic in a special appropriation bill. The bill tabled by the finance minister, which is expected to be debated with the National Treasury, allocates an additional 1.25 billion rand to the Department of Health to purchase COVID-19 vaccines and another 2.82 billion rand to social development for funding the distress grant. The country has ordered 31 million doses of J&J's one-shot vaccine and 30 million doses of Pfizer's two-shot vaccine, enough for 46 million of its population. From South Africa, we'll go to Kenya, where the Revenue Authority says it collected 176.66 billion shillings in taxes and levies in April, indicating an increase of 22.63% when compared to April 2020, on the back of increased compliance and debt recovery initiatives. The collections, which include taxes and agency fees and levies such as road maintenance levy and petroleum development fund, exceeded the 170.19 billion shillings revised target for April by 3.8%. Similarly, custom duty collections, domestic taxes and corporation taxes also exceeded the April target, marking the 5th consecutive month the Revenue Authority has outperformed monthly goals. The Revenue Authority attributes the performance to sustained implementation of compliance efforts, revenue enhancement initiatives, and improved service delivery to taxpayers, which has led to improved voluntary compliance. And in Botswana, it has launched the revised African Growth and Opportunity Act as a national response strategy, which resonates with national priorities for the promotion of an export-led and knowledge-based economy. Elements of the revised strategy include identifying sector representation to ensure in-depth and adequate sectoral coverage. The strategy aims to increase exports and attract investments targeted at enhancing industrialization for priority sectors such as textile and apparel, meat products, arts and crafts, jewelry and semi-precious stones, horticulture and agro-processing, as well as natural products. The minister explains that the 7 key priority sectors are based on high potential for exports, employment creation, poverty reduction, and economic diversification, among others. Well, that's it for the program today. Thank you so much for watching. I'm Ini John Mekwa.